Right. So good morning, everyone. And I would like to welcome everyone to Minds and Money panel discussion on long-term value creation. With the world coming out of the pandemic crisis mode and commodity prices up, what is the outlook on driving long-term value creation in the mining industry? But first, let me please introduce the panelists who represent both the buy side and the sell side, and then jump into the questions with a brief summary at the end. I would like to introduce Carl Tricoli, who's founder, managing partner, and co-heads the firm's mining team at Denham Capital. He brings 36 years of experience to Denham and is a member of the investment committee and the valuation committee. Prior to joining Denham in 2004, he served as president of Geos Capital, after serving as vice president for Anglo North America, managing director of Coke Producer Services, and president of Blackhawk Resources and mining director of corporate finance for Nations Bank Capital Markets. Carl serves as a member of the board of directors of Tremont Master Holdings. And Carl has a Bachelor of Arts from the University of Texas at Austin and an MBA from Cass Business School in London. Welcome, Carl. It's a pleasure to have you on this panel and keen to learn about more of your views on value creation.
Thank you, Carsten.
Next, I'd like to welcome Julian Treger, and Julian is the Chief Executive Officer and Executive Director at Anglo Pacific Group. He joined the group in 2013 and began his career working for Rothschild and an in-house corporate financer, managing a portfolio of public and private equity investments before co-founding Active Value Advisors to invest in undervalued, predominantly UK-listed companies, where he advised on more than 900 million of funds over a 12-year period. He currently serves as a non-executive chairman of Audley Capital Advisors, which he co-founded in 2005, which specializes in managing value-oriented special situation investment strategies through hedge fund and co-investment vehicles. Principal focus is on natural resources. Julian holds an external non-executive directorship with Mantos Copper, EBT Digital Communications Retails Group, Broadwell Capital, and Ilari Exploration. He has an MBA from Harvard Business School and a BA from Harvard University. Welcome, Julian.
Thanks very much, Carsten.
And then last but not least, Tony Makuch, President and CEO at Kirkland Lake Gold. Prior to joining Kirkland Lake Gold, Tony was President and CEO of Lakeshore Gold from 2008 until its acquisition by Tahoe Resources in 2016. Tony was Senior Vice President and Chief Operating Officer for FNX Mining and held progressively senior positions with Dynatech Corporation, including the VP of Operations. Tony also worked for Kinross Gold at a number of their North American operations, including GM of now the Kirkland operation of Macassa Mine and Timmins operations, Hoyle Pond Mine. Tony holds a Bachelor of Science from University of Waterloo and both a master degree in engineering and MBA from Queen's University in Ontario. Professional engineer of over 35 years. Welcome, Tony. It's a pleasure.
And thanks. We start to date ourselves in a number of things when we talk about our age of experience. You never even used to be 35 years old. And it definitely dates us. And on the other side is, I remember when I was younger, you talk about people being tramp miners. When you start putting together all the mines you worked at, I guess we all become tramp miners. You see a lot of head firms and a lot of shafts, a lot of things. Anyway, good to be here. Appreciate the opportunity.
Very good. And finally, I'll just throw in a couple of words about myself. Carsten Heide, I'm director with Partners in Performance. We are global management consulting firms and particularly thought partners to mining executives, strategic planning, business transformation, technology, and performance management. I've been probably working with clients across Americas, Europe, CIS, Middle East, Australia, as well as China. And in a prior life, I did research and hold a PhD in physics from Oxford University. So let me jump straight in, and there's a lot of interesting developments in the commodity markets. Prices are up, and with that, I think there's also positive momentum with the world coming out of the pandemic crisis mode. What's the outlook for you on driving long-term value creation in mining industry? And just to be a bit more specific, and I'll start with you, Tony. What are the specific value drivers you're focusing on, and what is there any difference from what it was a year or 2 years ago?
Okay, well, I mean, fundamentally in our industry, I think there's a few areas that are key to driving value. I think from number one is, I think we use a drill bit from an exploration point of view, and really, work towards outlining the current resource, and the potential for the resource and the mineralization at site that we can turn to reserves. So I think that's the number one part of value creation. And we can be sitting on deposits, and I can use an example of Detour. Somebody can say, well, it's got a 15 or 20 year mine life, but if we can demonstrate and 15 million ounces, so why do you need to look for more? Whereas if we can demonstrate that there's 30 or 40 million ounces, you bring value forward. I think that's very important. And then, with that, you tie the second part of value creation, which is, good low cost operations, and achieving solid results or industry leading results in terms of cost cetera, because then it's about converting the mineralization of the resource into ore reserves. So that's the second part of I think in terms of value creation in our industry. And then some of the new value drivers going forward, and what we're really seeing. I mean, we've always been focused on responsible mining, but more and more to be maybe more so. And in our industry, mining industry, we've I think being socially recognized, socially connected to the communities and the people where we work with, because we are a people-oriented business, and we are sort of fixed in a certain area for 20, 30, 40, 50 years where we have the deposit. So we have to set down roots and build a community. So that's always been important for us. But now more than ever, the social license and the communication of socially what we do, and really the investment in people in the community, I think is an important aspect of what we do. And in terms of value driving, what we do, value drivers, and maybe before, where we might have, and mining companies might have invested in hospitals and in some infrastructure in the communities where we work. We're actually getting back to maybe what used to be done 30, 40 years ago, where we actually take a more active role in some of these areas in the community, in terms of supporting both the education and training of people, and not just for to serve us, but to serve other parts of the community, and create sustainability, especially with our indigenous partners, and trying to create long-term value for them at their sites. I think that's an important value driver for what we do. And then definitely focusing on shareholder returns, and what we can do in terms of creating value for shareholders through a combination of and basically all stakeholders, but a combination of value, whether it's through dividends, what we do in terms of buying back our stock, in terms of really trying to create new value in the company all the time. So fundamentally, with exploration and responsible operations, we grow the value of the business, and then with that, it should then have some positive impact in terms of what the shareholders see. We got to be responsible, and we want to take that long-term view of where we're going to be. We plan to be there for 50 years, or I like to say a Detour, Detour, Macassa, and Fosterville, all our mines, 50 plus years. We want to be there. So you got to set down roots in those communities, and that means you got to invest in people. And one of the things I see, you mentioned I was a manager at Macassa mine, back in 1994, 95, and now I come back as a CEO, and some of the senior managers at site are the actual kids of the people that used to work there. So it's kind of neat to be able to see that. So anyway, sorry, I'm hoping that's not too long an answer to a simple question.
I think it's a very encompassing one, a very good one, and one I would love to sort of get in order to get the other Julian and Carl to be sort of engaging. But you mentioned the the social responsibility in particular as one of a key value driver in the community, and what I've seen particularly over the period of the pandemic, a lot of our clients have been very active, reaching out and being really the last resort to many of those communities from a perspective of providing materials, providing support, providing logistic support to medical supplies and all of that. Do you find that message has come out, and are investors reaching out to truly understand what type of involvement and engagement you have on the ground?
Well, that's a good question, because I mean, it's not necessarily always something that we advertise as an industry that, well, we're doing this. Like, like within Kirkland Lake Gold, we've done, we were really quick in terms of being able to support the local local communities in terms of providing, whether it's providing PPE and masks, etc., in the early stages, and basically to the community, the ambulance services, the hospitals and the regions. We provided things like we put in, for Moosonee, they had there's a train service that runs. They're not connected to there's no road connection. So that passenger train service was cut off to the community. So we put in a charter airplane that was at their disposal to fly people in and out, doctors, nurses, whatever they needed for medical things to support them. Provided some financial support to the hospital up there, and we did the same in all the communities we worked in, whether it's Cochrane, whether it was Bendigo in Australia, Kirkland Lake, and Timmins. So we did a lot of those things, and we continue to do things and going forward. But and then with our people, like we quickly went into getting rapid testing and trying to set things up so we could try to make people feel safe coming to the workplace. So we made a lot of changes in the workplace in terms of creating social distancing and more workspace. You can understand some of the challenges in a shaft operation where you got to lowering people in a conveyance, and we had to limit number of people that put in at any one time, and provide ways for people to social distance, and even some ways for people to wear either wear PPE in the underground workplace, and or change the work processes so they had the ability to social distance more in there. Similarly, at just trying to protect people when, like, it's similar, like I'd say a detour, it's a camp job, trying to protect people when they're coming on site. So we did a lot of testing. We started testing everybody to come on site so that you could feel comfortable who you're working with and who you're basically living with for 14 days, that you're safe. We actually did increase our rotation from 7 on, 7 off to 14 on, 14 off, to try to limit travel for people coming to site, and the exposure to them and their families from coming on site and going home. And then we even provided opportunity for testing for people when they were finishing work to go home, again, to protect them when they come back to see their families. So there's been a lot of things that have happened that we've had to do, but it's not really, I don't look at these things as cost, because again, 50% of what we do is and the money we spend is tied into people. But I say 100% of the opportunity is about the people, and if we didn't have the people, then you got a lot of nice looking rock in the ground that it's just mineralization. So yeah, you have to focus on those aspects.
Yeah. Carl, Julian, do you want to comment on this, and how do you see that sort of softer side of the value equation?
Well, go ahead.
I'd like to actually circle back to your original question.
Yep.
And then we'll sort of move into ESG, which is equally important. And the original question was, how do we see creation of long-term value in this sort of an environment? Because it's a tricky and challenging one as prices go up. And I think we have a couple of different things going on here. We have sort of a shorter term response as the world comes out of COVID, which creates some sort of immediate stress on supply. But then there's a little bit longer term sort of secular thing that's related to energy transition and some of the other issues where we'll see greater use of these commodities, particularly things like copper and tin and rare earths and the things we all know about. And so we've already had a bit of a price rise. And so as we think about long-term value and value drivers and what's important, the quality, it's obvious to say this, but the quality of the underlying resource becomes eminently important, because what happens in this environment actually is that prices rise, but also your costs rise. And so, we're seeing fuel costs go up, steel prices go up. As these commodity prices go up, you have the strengthening of the currency in various countries in which you're operating, and generally many of the costs are denominated in local currency. And so what happens is that the cost structure goes up, and the key value driver and thing that we really focus on ultimately is the margin, because it's a cyclical business. And so if we are investing at a time when commodity prices are high and valuations are high, and your cost structure therefore is high and your capital investment is high, then you better really make sure that you have very, very strong margins and a long life of your asset as you go through the inevitable sort of cyclical downturn. Now, I think we certainly have some runway here. And in addition, we're in the private equity business. So we're also looking at things in this sort of larger value environment that aren't strictly equity, that maybe are structured equity or some other things we can bring to the table. But key during a time when you are doing an investment, when prices are high, is that you have strong margins. Be very, very careful with leverage, and make sure your asset has a long enough life that you can go through the cycle. And Julian, I'll let you comment on that as well.
Great. Well, thank you, Carl. Well, I think that's useful. I mean, I also come to this from the investment side. And when I think about value, what is value? For us, it's a combination of assets, prices, and ratings. Now, I think on the asset side, you're going to be able to create value by increasing the purity of your assets. It is clear that there's going to be a higher and higher premium paid for purer assets, and the recent US directives on strategic minerals, I think, talks to that quite eloquently. I think with regards to prices, we need to change the perception of this sector we're in, from mining to materials handling / commodity extraction. And we need to explain to people that we're in a growth sector that is different from the past, and there's going to be a lot of demand for our commodities, and it's going to be difficult to supply them. And therefore, the historical default of the consultants to say that the marginal cost of a commodity is going to be the price needs to be corrected, because basically what this is telling generalist investors is that we're in a shrinking sector, whereas in reality we're in an expanding sector. And I think people need to understand that prices could be definitely stronger for longer, even though there will be this pullback as the Chinese try to control in the short term the trajectory of prices ahead of a completely different demand set that we are going to see. And then I think there's the whole area of ratings. And if we can get the story out that we are part of the future, that we are part of the growth, and we're part of the technology revolution, I think there is the prospect of getting a much better rating for what is, after all, a very strategic sector for the greening of the planet. And we collectively need to work at this. I think this whole idea that you do the mineral extraction and you get a 5 times or 6 times rating, for starting the spark of the process of, you know, civilization and greening of the planet, you need to be much more valued than that. And so I think these are areas which are going to be important in terms of value creation. And this is what I'm very interested in.
Yeah, and you probably saw, Julian, and the IEA just came out with a very, very comprehensive report on the importance of critical minerals and the importance of the supply chain. And so, you know, for people listening, it's well worth your while to go look up that report that the IEA just came out with.
Yeah, no, I think there's a general consensus, and everybody gets it now, that we are crucial, and the governments are getting it. There's going to be, like, you know, lots of governmental stockpiling. There's going to be lots of governmental funding, and this is really a very interesting juncture for our sector. And I think in 10 years' time, it's going to look very different to the way it is today, and there will be a lot of value created and some value lost, depending upon whether you're ahead of the curve or you know, sticking to poor quality production of less pure products, for instance.
But as Carl mentioned too, I mean, you know, so we can talk about the demand and supply over time, but we are a cyclical business, right? And most of us in our industry are price takers. We're not price makers. So we have to focus on responsible operations, costs, keep our costs down, as you mentioned, for our margins going forward, and really a big part of us, you know, and coming through this pandemic and even going into the future in terms of what we're seeing, you know, this is the investment now, and maybe in our industry, really looking towards you know, investment in automation and digitization more and more, and you know, there's the whole push towards net zero in our industry, and sorry, not just our industry, and the communities as a whole, right? And you know, focusing on these areas that it's not really supposed to be, not in there as a cost, but if we invest in it properly and execute properly, it actually makes us, you know, should be able to bring our costs down or keep our costs where they are, and make us, you know, create that sustainability of our business that can live through the highs and lows of the cycle, right?
So I think that, you know, that almost pivots towards you know, making innovation as part of your DNA, and you know, again, mining has been in the recent years sort of more as one of the laggards in that when it comes to innovation, Industry 4.0. But you know, and you mentioned digitization. It's easy to jump on the bandwagon, and I've seen large mining companies putting a lot of money in just to shutter their program after not seeing much benefit. But you know, they're different themes, right? I know Tony, you've been very much toying around with battery electric for underground operation. You know, mine electrification comes to mind as sort of a general theme. You know, thinking about the earlier commentary on purity. So what can you do in recovery improvement, in general mining methods? But then also one of the things, and from an investment side, I find, you know, project delivery seems to be also sometimes regarded a bit of a stepchild that sort of outsourced to EPCMs, where I think there's big potential to improvements. Out of those themes, where do you see the biggest push where value can be created?
Well, you want me to answer? I mean, you know, when we talk about the mining industry being slow to it, being adopting things like automation and technology, again, you got to think about, you have a lot of operations that have been built maybe 5, 30 years ago with where, you know, and so you have this, you know, this going concern that's already there, and then you know, and you have cyclical parts of the you know, commodity cycles that we have to be watching for, and the costs. and then you have the market and investors worried about large capital investments. So part of it is you definitely have to sort of balance the capital investment and the timing and these things in terms of when the technology is available to take advantage of. I think for us within Kirkland Lake Gold and really I see a lot of opportunity and value creation by taking advantage of technology. But what we try to do in order to make it work, we've got to start from the bottom up. First thing, like what we're doing up at Detour, we invested and we partnered with Rogers Communications in Canada to bring a full 5G wireless network onto the site, a private network onto the site, and tie that into the full 5G, extend that almost 200 kilometers to Cochrane to connect into the provincial network, so that you first off you need to have the platform to work with. That's number one, and then we can start looking at as we we're at a point in time where we have a fleet of equipment that it's going through its life cycle. So now we can start changing on equipment. So now we have the platform we can read, and now we can start buying equipment and have equipment that can be actually have the interfaces to be able to communicate, and the system be able to control it, tie that in with and that's in all of our equipment, and then tie that into looking at new ways to do things. Like we don't going back to finding new ways to what new processes in our business, whether it's how we crush, how we grind, how we drill and blast, how we even bring the ore back to the site. But when we talk about Kirkland Lake Gold too, and you say we're an early adopter of battery powered equipment, and I've heard some companies talk about, we got the first we have the first electric mine in Ontario. I mean, again, I'm dating myself, but matter of fact, in my first 25 years of experience in this industry, we were all electric mines. We were battery powered locomotives. We only went to diesel equipment to give you more flexibility. And so going back to battery to electric equipment, it shouldn't be a difficult part for us. What the difficult thing is to try to mesh the mobile fleet in an underground environment with the flexibility that you would get that we got from a diesel fleet, and then in terms of electrification of surface haul trucks and ore trucks, that's been in Sweden in the 90s, and a lot of companies, and this has been around for a long time. It's about us adopting that and putting it into work, right? So.
I mean, I think it does really depend whether you're an incumbent or a challenger as to how you view technology. I think with an incumbent, there are these improvements like electrification, recovery improvements. These are very important. I think if you're a challenger, more interesting would be, for instance, mining methods. I mean, I've been seeing very, very interesting technologies which, move quickly to carbon zero, remove combustion from smelting, remove combustion from steel making. How expensive, how viable, I don't know. But there does seem to be at the moment this conjunction of a huge emphasis on ESG, tons of SPAC money available for concept technology, mining, processing, stories, and the majors are producing vast amounts of excess capital which they can invest. And so I do think, it's sort of interesting if you look at some of these venture capital firms out of San Francisco, you're starting to see investments in our sector appearing in their portfolios. I was looking at Breakthrough Ventures or Energy, whatever it's called, the other day, and they have 2-3 investments already in our space alongside with all the other high-tech things. And it's a very interesting development, which I think has potentially profound implications for the way in which our sector evolves over the next decade in a very positive way, because people wonder where the supply is going to come from. Partly these innovations will help to make the sector more efficient, and so this is pretty exciting.
Yeah, and I mean, just some of that, like in terms of looking at different processes, how do we get away from in gold milling? How do we get away from use of cyanide? We also looking at from a water management point of view, looking density or dry stack tailings at deposition as opposed to liquefied tailings deposition plants, and changes the way we build dams. It actually helps and improves sites, and then investing. We talk about investing in alternative energy or renewable energy sources. Then actually, instead of waiting to end the mine life to do reclamation, we start doing reclamation as we go, and as part of our reclamation strategies could be, we're looking at things like putting in say solar farm on top of rehabilitated tailings areas, and sort of talk as the Zsa Zsa Warang down in Australia talked to me about, is how do we find ways to heal the earth back or fix it as quick as possible and bring it back and demonstrate to we need to be different, but we have to find definitely there's opportunity for a lot of different ways that whether it's mineral extraction, whether it's whether it's in the processing, whether it's in the overall life cycle of a mine. I think things there's a lot of new technology and new ways to do things, and I think on the other side, there's part of what we're trying to do in Kirkland Lake Gold is align ourselves now with both the community colleges in the region where we work and with the universities in the regions where we work. Start investing in some applied research in different areas and see what you might get that might find that we don't even know about yet. But trying to put money into work in those areas and take advantage of again different ideas coming in from people from outside.
And one other thing I'll add, I mean, that'll actually but back to an earlier topic we were talking about. So I think we see a lot of things, ranging in everything from, automated trucks to, as you say, electricity supply to the mine side and all of those things that are very helpful. As I look at the industry and we talk about efficiencies and how can we bring this supply on to meet the demands we're going to have in the energy transition, to me, one of the most impactful things that the industry will need to be doing is developing even further the way that it interacts with communities and governments. Because as I look at our own projects and timelines and the ability to, deliver a producing mine and what are the constraints around that, I mean, interestingly, it's not so much the technology constraints, it's constraints around going through permitting processes and interacting with local communities, which is incredibly important. And so I think actually a big factor in bringing this additional supply on is we all as an industry need to get even better and better in forming partnerships with government, with sort of environmental regulatory agencies, with the local communities in which we operate. Because again, when I look at bringing these projects online and the timeline for those things, those are often the things that take a tremendous amount of time. And to be brutally honest, they often take a lot of time because we're not really good at interacting with those various constituents. And we just have to get a lot better at our partnerships with, again, the environmental constituents, with the community constituents, with the government constituents. And likewise, hearkening back to what you said earlier, Julian, the governments, to the extent that they want to see the supply come on, are going to have to also enter into these partnerships so that we can move these projects along.
So you were mentioning the overall project delivery. Aside from constituents, other stakeholders, do you see, when I look at a lot of the large projects, there are very few which come in on time, on scope, and on budget. Most of these mega projects actually tend to be 50 to often more than 50% over budget and over schedule. Some of that has to do with constituents, but are there other reasons you see in other challenges?
I mean, we've actually done a fair bit of work on this, and we have paid our share of tuition on late projects, and I would, and I'm very interested also to hear what Tony has to say about this. I think what we have found is the more time that's spent before shovels put in the ground, then the better off we are in terms of schedules and budgets. And I think our experience has been, you know, the less work that's done in terms of testing, in terms of engineering, in terms of a lot of other things. If you move forward with a sort of, we'll figure it out when we get there, that's when you tend to have the cost overruns. And the more work that you can do before you launch the project, the more the tendency to get it actually on time and on budget. But Tony, you've spent a lot of time in mine, so I'm anxious to hear your view on this as well.
Yeah, again, and it, if I look at a lot of projects I've been involved with over the years, I mean, fundamentally, first off, in terms of building the mill or building the mine, that aspect is and for the most part, some of that stuff is fairly easy and goes very well. I think the area that maybe our industry doesn't explain itself well is sometimes we're building a mine, and you can look at mines being built by Barrick or Newmont in South America, or what we build with with Dynatec built, say in Madagascar, we're doing Sudbury or Timmins or anywhere. We're not just building a mine. A lot of times, what we got to do is we got to bring in the power, we got to bring in water systems, and we got to bring in communities. So we spend a lot of money actually providing some of the basic infrastructure for the communities and people we are, and in some of those areas, a lot of that, the scope of what you originally think about building, and what you get to are two different things. Sometimes you have to build port facilities. You have to bring that major infrastructure into these areas. Then the communities actually get some benefit from it. But that's one area in our business, especially on these mega projects, that maybe gets maybe we don't communicate well enough, or gets misunderstood, and then it's the interaction of that now with the communities and the regulators, and how that impacts the schedule and the overall scope and the costs. Again, because sometimes those things are much more harder to predict than what is thought of. But I fundamentally, again, how do we counteract that? Well, and what we got to do as mining companies, and we got to live it. We in the end, if we're setting up mines in mining communities, we got to be prepared and to live in those communities too. Our people live there, and so a big fundamental part about understanding what's required, as well as being able to get your permitting and going through the regulators. A lot of people complain, it's taking too long to get stuff through regulators. First off, it's just paperwork. You got to do the work properly. You got to dot the I's, cross the T's. So there should be no shortcuts. Second thing, though, is you got to have the relationship. You got to be there. You got to know who the people are, and you got to live it. You can't just be somebody. We always talk about we can't just be somebody who lives in a high office tower in Toronto or London, and come in and talk down to a bunch of people that are working in these communities. You got to be actually talk up to the people, or recognize that this is people's homes, and that, this impacts a lot of other things in terms of what we're trying to accomplish, and recognize that you can be one of the people that are there. I think that helps in terms of moving projects forward. And we've had a lot of success in Kirkland Lake in terms of permitting. Whatever we want to accomplish, whether it's in Fosterville in Australia, or in Makuch and Kirkland Lake. Makuch and Kirkland Lake, we recognize that we back in 2016 when I joined the company, it was pointed out to me that we had a tailings dam stability issue. So and the potential that because the design criteria wasn't matching. So immediately we talked to the regulator, said, here's what we got done. We got engineered, we got it fixed, spend $25-30 million fixing it. And you're able to get that done. You want to sink a shaft, you need a shaft. We talk to the communities. We're not spending 3 or 4 years getting it permitted. We can get started within months. You can move forward. So a lot of this thing about permitting and all that, sometimes that gets overblown because of or used as an excuse because people maybe are either procrastinating in those areas, or maybe people aren't as much on top of it, and or fundamentally you always got to keep our feet on the ground and recognize that we're no better than anybody else, and be able to deal with people on an interest-based level in terms of what's required in order to do the work, and what's required in terms of building the mines. I don't know.
I mean,
sorry, maybe I digressed a bit.
I think that, again, as the image of the industry changes from the past to the future, and we are crucial to greening, hopefully the association of mining with pollutants and being dirty and, you know, belching, you know, carbon dioxide needs to change. And as that changes, I think people will start to be more open and positive about the sector. I also think that some governments, maybe I'm being idealistic here, Carl, but I think as some governments like the US really need to get more strategic minerals, they may actually accelerate. They'll have to try and bypass a lot of the approvals processes. And the other thing is that over the next couple of decades, mining will become the minority of mineral extraction. So, and it's much easier to get retreatment licensed, and recycling is going to become super strategic. You know, the EU is now banning the export of recycling materials to other parts of the world because we need to keep our old items in Europe so we can recycle them and we can have a much lower footprint. So I think that's what I say, the sector is going to change. It's not going to be about mining central. It's going to be about commodity extraction, minerals handling, and how we work together in a circular way to make a greener world. And that will be more acceptable to communities.
So Julian,
that's a good point. Become less of a throwaway society and more of a recycling society, right, at a whole.
Absolutely. And they're now working out in the US, you know, how you can recycle more easily. Like you don't have to go and drop something off to get it recycled. They'll pick it up from you. So there's going to be all these ways in which recycling becomes essential. Obviously, gold can be recycled, and it's going to be a very interesting part of the new world.
So Julian, I'd love to go, because you also mentioned some non-traditional investors in the field. In taking that sort of broader view of value creation, do you see opportunities for more vertical integration in the sector? And how would you see that?
Well, I definitely think, I mean, ultimately, if you want to have zero carbon steel, I mean, the best way of like trying to control that is to go all the way up the the cycle. And also with technology, I mean, if you have a great technology, to have an asset that you can apply it to, and then another technology which you can apply the sort of processing to, really makes a lot of sense. I think there will be more of these supply chains. I mean, we're seeing it happen globally. You know, it was China was the only person doing this in a vertically integrated way. Now we're going to see the EU doing it, the US doing it, Japan doing it. Eventually, the UK will wake up, and I think you'll see that happening both publicly and privately.
Yeah, I mean, you see an example of this, you know, and you're talking about the U.S. initiative, et cetera, but you've seen a great example of this in MP Materials, which has a very specific strategy of literally going from mine all the way down through magnets, and you know, with rare earths, and then a refining of rare earths, and then all the way through to the building of magnets. And you know, those are the sort of secure supply chains that we're going to need, and that governments are suggesting. And so I actually do think, you know, the oil industry has done this for a very, very long time. And I think you'll begin to see some of that, both forward integrating with, you know, historically, you know, companies involved in mining going more downstream, and then the reverse of downstream manufacturers going back either directly by owning or very, very strong supply, looking all the way through, not only for a security of supply, but also looking, as you mentioned, Julian, at a sourcing purity of supply and where those materials are coming from, and making sure that those materials are sourced in a sustainable and responsible manner.
Since we are sort of nearing our 45-minute mark here, would love to have everyone just sort of give a concluding sort of statement as I see what are the key elements of value creation going forward in their view as a sort of summary statement. Who wants to jump in first?
I mean, I'm in much agreement with Julian. I think as we look to sort of a greener future and an energy transition, I think the world is now beginning to focus on, and they hadn't until just very recently, at the required supply chain, and I think that puts our industry squarely in a position of growth and one that is vital to supplying the supply that's going to be needed for energy transition. And so, that's a very important backdrop. But I'm also in agreement with Tony that from a very fundamental standpoint, big margins, long life, low leverage. If you got to stick to those fundamentals in terms of our business, but our business, I think, is set for some significant growth.
Yeah, I mean, I would agree. I think it's purity and scale of assets is definitely important. Higher acceptance of long-term pricing will create a lot of value. Avoiding carbon taxes by greening, because that's coming. And then obviously, linking more into the tech sector to get a re-rating for the whole industry, I think is very important. And some of these more circular things are visualized as less cyclical, more sustainable, and therefore they'll have higher ratings, and that should drag the whole sector up. But I think there's a lot of value that's going to be created, but it's going to be a disruptive period when things change quite significantly.
Yeah, I would support all those comments. I mean, for us, I think innovation is critical to success, and we got to be able to, invest and adopt. Both invest into looking for new ways to do things, but also adopt, not be stuck in with preconceived notions that things don't work, and adopt different methods and different ways to do things. Be it into improving efficiency and productivity at our sites, but also in achieving a lot of our other most important business objectives, like we have with going to net zero, by 2050 or earlier. The other part of the investment is in our social license. That's and the communication. How we do that is no question a big part of it. It's a big part of us achieving net zero for our industry. And so we have to make sure we find ways to deal with our communities. And when we talk about going to net zero, we got to understand all the impacts: Scope 1, Scope 2, Scope 3. How we work, how those all impact us in the supply chain, and what we're using. So sometimes some of the products that we need to carry out our work, if we can change some of our ways and have less of those products or less of those things, that it's going to improve us. The other part is really investing, right? If you're going to invest in innovation and in new ways, you're going to invest in people. And when we talk about trying to build a smart minds or going to digitization and automation at our operations, somebody might look at it and say, "Oh, well, we're going to reduce the number of people working at the site." We may reduce the number of truck drivers, but we're going to probably increase the number of people that are focused on the technology, supporting the technologies, support the work. I see the mechanic of the future, the heavy equipment mechanic of the future is not going to be just somebody who can pull a wrench and has grease all over their fingers. They probably still have to have some of that sometimes, but they're going to be somebody that also carries very fine screwdrivers and knows a little bit of electronics or electronics and instrumentation, and knows how to program, and knows, and it's sort of like is a little bit everything. So somebody with grease under the fingernails and calluses on their hands, but real soft fingertips that's able to program things and think differently. So I think it's pretty exciting, because in terms of a lot of the changes are going to come and the new things that can happen in our industry, it's actually a pretty special time. So
Great. And I'll like to thank everyone for their great comments, and I really enjoyed that sort of final conclusion. We need to attract the talent as well, making sure that this industry can go through this transition. So it's by making it more exciting, by being more versatile to the technology, to all the challenges, it becomes I think also more attracted to getting new talent into the industry, which in itself will be very dynamic driver of that change. So thank you everyone, Carl, Julian, Tony, for your contributions here. And I guess we can continue to talk, but I think that's sort of the end of the official part here for the taping.